Views expressed by CamaPlan podcast guests may not reflect those of CamaPlan. CamaPlan does not guarantee the accuracy of information provided by guests, nor does it endorse or recommend any individual or organization. CamaPlan is not an investment advisor, CPA, realtor, or attorney. You are encouraged to conduct your own due diligence before making investment choices. For any tax, legal, accounting, investment, or other questions, please consult a specialist. Welcome back to the Road to Financial Freedom, where experts share stories and secrets to unlocking financial independence. This podcast is brought to you by CamaPlan, a self-directed IRA administrator focused on educating investors on how to grow retirement savings faster through alternative investments. I'm Ricky Trong, CamaPlan team member and podcast host. In each of our episodes, we're going to take an in-depth look at the many roads taken to financial freedom and how they differ for each of our guests. Today's guest is Simon. He's an expert in the commodity space, particularly gold. He cut his teeth in the city and property, where he ran a property development fund. But he sees commodities as the future, since you can't print them. Now, let's hear more about his journey straight from the source. I'm going to welcome Simon Popple to the show. Hi, Simon. How are you today?
I'm very good. Great to be here.
Really great to be here. And he's coming all the way from the UK, and we're recording here in Pennsylvania. So we love Zoom because it makes it easier for us to meet people all around the world. So I'm excited to hear about Simon today. So let's just jump right into it. Tell me a little bit about your background, how you got interested in investing, and what you're doing to help educate everyone in the commodity space.
Well, I sort of made my money, I suppose, in property. But about 14 years ago, I became, especially the crash of 2008, I became a bit nervous about the future of property. Now, admittedly, I got out a bit early, but I was really kind of looking for the next big thing. And I viewed that very much as commodities, in particular gold and silver. And so I made some investments. They did particularly well. So Money Week asked me to write a newsletter for them. And then when they were acquired, they moved me over into their UK Agora division, and I used to write a newsletter for them. I've really been kind of looking at the sector for quite a long time, and rather bizarrely, it's got more and more relevant to investors over the years. And so, I think there's quite a lot that we can talk about that your listeners will find really interesting.
Yeah, definitely. So why don't we just get right into it? Let's talk about, what a commodity is for those of us that may not know. We have new people to this podcast every day. So let's go into the commodity. And then what do you mean by you can't print them? Maybe explain that a little further. I know some of us do understand that, but there's some that might, and I'd love for you to explain that.
No, sure. Well, I think the thing about commodities, let's deal with you can't print them first. Commodities are real things, and not only are they real, but there's global demand for your gold, your silver, your uranium, copper, cobalt, whatever it is. And what I love about commodities is not only can't you print them, but because they're so global, there's demand for them, across the world. So you can get not only diversified in terms of different commodities, but because of the global appeal, you also get diversified in terms of currencies. So some of the positions I have are in Canadian dollars, some are in Australian dollars, some are in US dollars. And so what I like is I don't feel like I'm putting all my eggs in one basket. I've got different currency exposure. I've got different country exposure. I've got different commodity exposure, and all in things that you can't print. So, I love the sector.
Wow. Yeah. And you sound very diversified as an investor. You have money in all different countries, which seems to, from what my experience is, it makes it safer for that diversification. Correct me if I'm wrong, but I feel like is that how that works? It makes it more.
I find that, wherever you live, obviously you're in the US, so your house is denominated in US dollars. Here in the UK, it's denominated in pound sterling. So I've got huge exposure to pound sterling, which, on the one hand is great, but on the other hand, I want to have exposure to other currencies as well. And so that's what I like about commodities, because it helps me diversify my currency exposure as well as asset exposure.
Interesting. That's interesting. So Give me the story about gold, because I know it's been around for thousands of years. So what is it that makes it, we even call it the gold standard when we compare, something like of immaculate value. So can you go into that a little bit and maybe give us some background on how that started? If you know the story, I'm not sure.
Yeah, well, I mean, gold's been around, as you say, for thousands of years. And I think there aren't many assets in the world that are universally viewed as valuable, and gold is certainly one of them. And one of the reasons gold is considered valuable is it's rare. I keep going back to this. You can't print it. It's divisible, so you can have different sizes of coins or bars, whatever you're referring to. If for some reason you want to sell it in a different country, different currency, you can. And again, I think there's a real issue about diversity here. I mean, you could have an apartment in, say, New York, which is a certain amount of square feet. Now, what you're buying there is sort of space. The same space in the middle of the Midwest is worth a very different amount of money. Now, what I like about gold is worth the same wherever you take it. For me, that's very important, because in the unlikely situation that you want to travel large distances or perhaps live somewhere else, it's nice to have at least one asset that's worth the same regardless of where you take it.
Wow, that's interesting. I never thought of it that way. So thanks for explaining that. I mean, it is definitely valued all over the world. It is similar. I mean, it's been used for hundreds of thousands of years. I mean, I think in ancient Egypt, they made things out of gold and they were covered in gold when they were buried. So, I mean, it's been seen as, a standard even back then. I mean, the pharaohs and today you can invest in gold and it's still available. So that, I guess, it makes it very a unique investment on one side, but also a generic investment because it's been around for so many years, I guess. So Simon, tell me about how a gold investment would be. Is it similar in all places? Are they different? How do they differ from place to place?
Well, I think this is a very good point, because gold investments vary dramatically. Everything's sort of got a different risk profile, different return profile. And if you want to invest in the sector, you have to invest in an area that suits you. For example, if you're looking for your retirement fund, then you're probably looking at something that's perhaps slightly lower risk, perhaps longer term. You've got physical gold, which if the gold price moves up, then essentially you've got cash. Then you've got producers, the large companies out there in the world who are actually producing gold. So obviously you've got exposure to gold and exposure to the costs, but there's less risk because they're already producing cash, they're getting it out of the ground. And then if you want to take on more risk, you've got companies that are perhaps new to production or relatively small producers, and perhaps only producing one commodity, let's say in this case gold, because some of the large companies, they produce lots of different types of commodities. And then you've got what I call the forwards, which is sort of the out and out explorers, really high risk. But, I told my subscribers about one called Chalice, which went up 65 times. So that's over 6,500%. But yes, I mean, these kind of stocks can also fall dramatically as well. So you don't want to have all your eggs in one basket. I think that if you want to invest in the sector, you want to look at sort of what you want from it and invest accordingly.
Okay. And then I guess that brings me to my next question is, I know we spoke about this a little bit before we started recording, but if someone were to come up to you and say, what is the best investment for you to look into or for me to look into, how would you explain to someone that, a gold investment could be great for them, but needing them to really do the research? Is there a way you go about that if people ask you these questions?
Yeah, no, absolutely. I mean, I think the important thing is to play with the cards you've been dealt. And what I mean by that is, investors, what's a good investment for you may be a bad investment for me, and vice versa. And so when you look at perhaps investing in gold, you want to look at lots of different aspects of what you want out of the investment. Do you want income? Is it a long-term hold or is it a short-term hold? What degree of risk do you want to take? Now, you can probably find gold assets that you can invest in that meet a criteria, but you don't just invest in gold. If you want to be low risk and get a return quickly, then investing in a gold explorer could be the worst thing you do. But if you want high risk and you don't care about the return and you've got a long time to wait until you look to realize the investment, a gold explorer could be a fantastic thing for you to do. So you really have to match your investment criteria with the particular gold asset you want to invest in.
Okay. So I guess it goes along with any type of investment. You really have to understand what your goals are in the long term or the short term to see what you're doing for them to be able to weigh out, the best investment for themselves. Would you say that's correct?
Yeah, absolutely. I think it's important for people to really kind of think about what they want from the investment and then align that with a gold asset that has got a reasonable chance of delivering what they want. I think one of the biggest criticisms of gold is, and investors for that matter, is they invest in a certain type of asset that's wholly unsuitable for what they're looking to do. And whilst return obviously is important, so are many other things such as risk, and you need to make sure that you've got a good match between the two.
I gotcha. You have a business, I believe, called Brookville Capital. Is that correct?
That's right. Yeah,
Okay.
I'm really in the business of trying to educate people about looking at commodities, and for example, if they're trying to look at a commodity company, I use a system called the Bridge system, which is an acronym for balance sheet, resources, infrastructure, diversification, grade, and exploration potential. And what I'm trying to do is teach people how they should look at these different criteria. You may find that it's got a great balance sheet, great resources, and great infrastructure. But if the grade is awful and there's no exploration potential, it may not be what you're looking for. So what I'm really doing is trying to educate people about investing in this sector and making sure that they know what they're doing and they're either looking at the right things, or if they're getting someone to do it on their behalf, they're asking the right questions to give them the best possible chance of getting the kind of returns they want.
Okay. Let's see. You also have a YouTube and you do your own podcast. What are the type of things that you talk about? I'm sure they're along the educational lines. Is it all have to do with commodities, or do you ever talk about anything else or the risk factors of investing in other options?
No, I mean, it tends to be talking about investing in commodities, particularly mining companies, because I think that's quite a good way for investors to get exposure, because you can invest through, in most cases, your conventional platform to get exposure to the companies, the currencies, and obviously the underlying commodities. So, yeah, I mean, what I'm trying to do is educate people, even though it's relatively straightforward, a lot of people don't know where to start. And so just sort of pushing them in the right direction with a bit of background information is very useful for them.
Yeah, definitely. And we're all about education here with my sponsor company, CamaPlan. We always try to educate as much as we can, no matter what kind of investment we're talking about. And a lot of our clients do invest in commodities such as gold and silver. So that's really interesting. Where would you say, if a client were to come up to you and say, what's the best place to start for me to start doing the research on how to figure out what's best for me? What type of things should they be looking into or learning about to see if they're, they match what the company is providing for them to invest in?
Yeah, I mean, what I say to a lot of my clients is you probably want to have some physical gold, silver to kick off with. And once you've got some physical gold or silver and you could be very careful where you get it from. I'd only go with a bona fide, well-known organization. But once you've got that, then you can probably go up the risk curve a bit and then say, well, I've got some physical. I'd like to perhaps buy into one of the larger players, Rio Tinto's, Barrick, BHP, those sort of things, and then it's a bit like a funnel. You've got the giants, the physical gold and the big companies, and then you kind of move down into more niche areas, and you may go for a company that's new to production and then go into the exploration. But I'd suggest that people go for some of the lower risk stuff first, And then sort of once they understand the sector better, they can kind of increase their risk and, look at some of the other smaller companies.
Okay. That's great information. Thank you. And I didn't even know that there was, a company that could provide a gold investment that wouldn't be like what we would call like legitimate. Is there any kind of risk factors or, blatant stop signs that you would say to look for if someone, if maybe they're not the most well-known, but you want to make sure that they're not going to be super risky or?
No, sure. Well, I mean, I would suggest that, you speak to, obviously there's a US mint, they mint Golden Eagles, and you should have a look and I would have thought they have a list of bona fide gold suppliers. There's a World Gold Council. I'm sure they've suddenly got a list. So by contacting these sort of organizations, you feel a lot more comfortable investing through someone who's, recognized by them. In terms of red flags, if anyone offers you cheap gold, I would be incredibly nervous. And I think buying gold is a bit like buying fine wine. If you're buying it from a reputable source, you may pay a bit more to get it, but when you come to sell it, if you say, I hold my gold with, it's all American Eagles, and I've held it with the same company that has minted it, and this is a top company. Two things. First of all, it helps the buyer because the buyer's like, yeah, I know I'm getting what I've been told I'm getting, and it helps the seller as well because chances are that gold's never even left the mint, and so it doesn't need testing. They know it's for real, and you've got to be careful about taking delivery of gold, for example, because first of all, that could cause insurance issues. If you get robbed and you say you've got $100,000 of gold in your house, the insurer probably won't want to pay up unless you tell them. And if you do tell them that you've got that in your house, you'll probably find that your insurance premium goes through the roof. So if you are going to do it, I would say, to an extent, I would view it as insurance as much as an investment. Because of that, yes, you obviously want to make money, but sometimes it's best to go with firms that may be slightly more expensive, but just give you that peace of mind.
Okay. And yeah, I didn't even realize that. I forgot that you can even hold physical gold, and that would be considered an investment too. So thank you for, bringing that up. I wouldn't even have thought of that. I don't really invest in gold myself yet, so I haven't had that experience. But what's an experience that you've had maybe with a learning experience over time, like through the investing of commodities? Is there a certain story that maybe jumps out at you about that, or helping a client with their investment journey?
Yeah, I mean, I think there's, when I talk about my bridge system earlier, one of them is exploration potential. Sometimes, you can look at situations and, Chalice is a great example. I was very excited about Chalice because they had tenements next to Fosterville, which is the world's highest grade gold mine. But they made all their money, the share price went through the roof because of a great find at a completely different asset. And so, one of the great things about these, particularly the explorers, I mean, yes, they're very high risk. When they do find something, or if they find something, first of all, it can be in a completely different commodity than you're expecting. There's a few examples at the moment of companies that have had, let's say, lithium assets, which they haven't really cared that much about. But the price of lithium has just gone through the roof. And so something that was viewed as a sort of also ran suddenly becomes a flagship asset for them. And so, there's some really amazing stories out there. Some of the companies I've invested in, they've gone through the roof, but for very different reasons as to why I invested. But I like that, because sometimes you don't have to be 100% right about, why you're doing what you're doing, and you can get an amazing result, but from for a completely different reason to what you're expecting.
Huh. Wow. And you're talking about lithium, like what they use in batteries. Is that the type of lithium?
That's right. Yeah.
Oh, wow.
I mean, there's a few companies in Australia and US and Canada that, the values have gone up dramatically because the value of lithium's gone up. You find with some of these smaller companies, they've perhaps got, 3 or 4 tenements, and, one is very prospective for gold, another for silver, another maybe PGMs, and another maybe lithium. So, at the time when you make your investment, you're perhaps focused on gold or silver, whatever it is. But because other assets and commodities, can change in price, if you happen to hit a winner like lithium has been, the prices can go through the roof.
So if you're invested with one of these companies that you believe it's a gold company, they're portraying themselves as a gold mining company, and they come across lithium, does your investment still go up because they found lithium, or do you have to be invested in lithium through them for that to be, valued to you?
No, I mean, you're investing in the shares of the company.
Okay.
So if they're exploring for gold and they come across lithium, then you win. I think the only thing I'd say is that when you do mining, you basically drill and you have assays. And so you need management who obviously are looking at the assays and know what to look for. Because if they're looking for gold and it's packed full of lithium and they don't understand lithium, they can miss it. Stuff goes to the labs. You hope that, and it's important to look at the management, because it's important that the geologist or the lab or whoever's looking at it has got at least an understanding of perhaps some other assets that could be in the core, because in this example there could be no gold, but there could be loads of lithium, and so it could be very valuable.
Yeah, that's why it's important to have all different types of experts on their teams, I guess, for them to be able to differentiate of what they're finding. Wow, that's interesting. I guess, let's ask a question that we always try to ask here on the road to financial freedom. What does financial freedom look like or feel like for you? What kind of experience have you had with that?
Well, the thing I like about commodities, the returns can be, now I have to emphasize can, but lithium went up 65 times. You can get stocks going up 100 times, even more than 100. But if you can get one winner, maybe two winners, the results can literally be life-changing. And financial freedom, as I said a few minutes ago, you need to know what you're doing. But I think that I like investing in a sector where I've got some assets that are probably a little bit boring, to be honest, but they're doing what I want them to do. And then I've got a few that are less boring, a bit more risky, but still potentially some good returns. But then I've got a few of these other ones which, if they come off, and it's an if, but the returns can be life-changing. And for me, that's, if you get one of those, you've definitely got financial freedom. What I like about having some of the less risky stuff is if that does go up, double, treble, which it can do, then even if your high risk plays don't work out, you can still make money.
Okay. Yeah, I feel like that's with any type of investing, you have that opportunity, but it sounds like you have very diverse investments. So you like to make sure that your portfolio is diverse so that if anything were to happen in one sector, you would still have, the comfort and the availability in another sector. So that's really great. Diversity. We always want to tell our clients to make sure that they have a diverse spectrum of what they're invested into, so that, like in the US, inflation is just crazy here. So, you don't want to be invested in certain things because of that. So at least you have other options here going on.
Yeah, I think you mentioned inflation. I think that's very valid, because, there's no perfect hedge against inflation or market corrections. But gold has, it's performed pretty well. And yes, there's been times when there's been a market correction and gold's corrected as well, but there's been a lot more times where there's been a market correction and gold's actually done pretty well. And so for me as an investor, do I want all my money in gold? Absolutely not. But I like the idea of having some of it in gold, because if there is a market correction, I feel there's a chance that gold could hold up quite well. And if that's the case, that could put me in a much better position than a lot of people find themselves in.
That's interesting. I know with, supply and demand, does that affect the price and fluctuation of gold? Because I know that, they have to mine for it. So there's always a supply and there's always a demand for gold at some point. I know sometimes it's higher than others, depending on, I think, generationally what people are liking, but does that really affect the price of gold as well?
To a point, yes. You tend to find supply and demand are relatively stable, but we're talking about physical gold here. There's also the paper gold market, which up until now has worked very smoothly, where people buy a gold product and then they get paid the fiat equivalent of whatever that contract is. But for me, I prefer to have the physical gold because, if at some point people wanted to take delivery of physical gold rather than be, cash settled, some of these contracts would be under a lot of pressure.
Okay. Is there any maybe advice or, information for our listeners that they should be looking out for when researching these types of investments? Maybe big red signs that are like, this is a good company or this makes it a difficult company to want to invest in?
Well, I've got a book actually, which your investors, if they send me an email, Simon Popple at brookfieldcapital.com, happy to send them a copy of that, which I think will set them on the road to investing. As I said, a few minutes ago, I think it's very important that people are very clear as to what they want to achieve and what risk they want to take. It's not all about return. The returns, don't get me wrong, can be amazing, but, they can also be dreadful. If you want to take huge risk, yes, you can do that, but that's not suitable for many people. I think just understanding it and reading around the subject, that's what my book does. it's only about a couple of hours read. I think that'll give people certainly more confidence to look at the market. But, as I say, I wouldn't advocate putting all your money in gold or all your money in anything for that matter. But I think it's an asset class that it's important people look at.
Okay. And I know a little bit ago you had mentioned gold in correction. Could you go over that a little bit? Like how something like that would work, how it would, if something were happening with inflation, how gold would correct itself in the market?
If you go to my website, www.brookfieldcapital.com, I've actually got a page that shows how the COMEX gold has performed relative to the Dow under various different corrections. I suggest people look at that. I've got all the charts on one page, but if you're particularly keen on one situation, you could always just Google gold versus September the 11th, whatever, and look at a specific event. I think that there's a lot of examples of how gold's performed in a market correction, and if there's something you're particularly worried about, then you can compare it to that market.
Okay. Is there anything that you think is important that our audience should know that you'd like to share with them in regards to commodity investing or, what you do to help your clients succeed?
What I'm trying to do is like you, educate people about investing in gold. And I think that they should really consider it. Should it be a large proportion of your portfolio? Probably not. But I think you should have some in your portfolio. And that's why I'd say that perhaps people read my book or read a book, doesn't really matter what, but just try and understand it. And if you've got enough brains to make the money, you've got enough brains to invest it. I think that people should then perhaps allocate a proportion of their portfolio to gold or commodities. Just give themselves a bit more diversity. I think everyone should consider it, and I don't think many people do.
Yeah, I think that's true because I think especially for me, I don't want to speak for everyone, but I think it's a little difficult to wrap my head around owning, physical gold, even if you don't actually have it in hand. I understand with stocks and bonds, you're buying into a portion of a company, but I guess for me, it's the I don't understand what differentiates the gold paper, like you had mentioned, versus the actual gold physical. So maybe that's the confusion of why, some people don't really consider it. I hadn't really considered it until, recently. And then speaking to you, it's more of an interest to me now. So I'd love to do more research and, figure out if it's right for my own investing. So, that could be part of it. I don't know. That's just my own experience.
No, absolutely. Well, it's just finding out more about it. And I think particularly if people are retiring, with this high inflation and interest rates going up, I think if there was ever a time to consider gold, now is the time. If you look at it and decide it's not for you, so be it. But I think that in a lot of cases, if you do a bit of research, you may think, well, actually, I wouldn't mind having a bit in my portfolio. It's been around for thousands of years. Interestingly, Bitcoin is depicted as a gold coin.
Mm.
So, there's always talk about digital currencies and everything like that. And, I've got nothing against any kind of form of diversification. But, when you've got probably one of a leading digital coin and it's depicted as a gold coin, that's not lost on me.
Yeah, no, that's interesting. You brought that up. Yeah, we have had some crypto, and I feel like that's really the difference. I think why maybe the younger generation is more interested in the digital aspect of the Bitcoin because they understand the technology, and then the older crowd is a little bit more leaning towards the investing in gold. Because I know, like personally, my mother-in-law, she loves gold. Like she loves investing in gold. That is like one of her favorite things to, have either in hand or invest into, because she feels the safety of it. And I think it goes back to, the thousands of years of it being available. And then of course, like when my husband goes, oh, do you want to invest into Bitcoin? She doesn't understand the technology behind it. So maybe that's where the differentiate is, like for the younger generation, that they should look at gold as, basically the Bitcoin is based off of owning gold. Is that correct?
Yeah, I mean, I think that, certainly with, a lot of the safe haven buying that's happened over the last couple of years or so, I think, the existence of digital currencies such as Bitcoin has probably taken some of the demand away from gold. But I think the performance of, Bitcoin and some of these digital currencies over the last year, where they've, halved in value, has meant that people are, on the one hand, they can see it as a way of diversifying, but on the other hand, they are perhaps nervous about having it, very much as their future asset.
Definitely. Yeah, I agree. And I think this is really interesting. And I think this conversation can definitely be continued. I really want our viewers to, reach out to you if they need to know more. They can find you at
the website is www.brookvillecapital.com.
Right. Brookville
or they can just email me, Simon Popple, Popple, at brookvillecapital.com, which is BROOKVILLE capital.com. So, but get in touch. I'll send you the book. I'm actually just going to be updating it. But, you're more than welcome to have a look. I'll give it for free. And, you can read it and decide whether or not you want to invest in gold.
Yeah, definitely. If people are getting, just involved in it, it would be a great place to start. Simon is more than happy to answer any of your questions as well. I'll have all the links for those in the description as well today. And Simon, is there anything that you'd like to, maybe a quote or something that you feel would resonate with our audience that, could help them understand the necessity of gold or exploring the necessity of gold to diversify themselves, or maybe even just, a quick little tidbit of anything that you'd like to add?
Yeah, well, I think it goes around to the point you made at the top of this conversation. You can't print it, and money has been printed left, right, and centre. And these commodity companies, or you could buy physical commodities such as gold and silver. I just think you've got to look at them, and even if you look at them and decide they're not for you, that's fine. But I think if things unravel like they could do, and you haven't even looked at them, you could be kicking yourself.
Well, there you go. Yeah, it can't be printed. And that, I believe, I know there's some countries around the world that are just printing money, and, it's the money is getting worth even less because of the printing ability. So the gold is always going to be there. It's always going to be that standard. They just have to, have it in hand. Well, Simon, thank you so much for the education here today. I really think this is going to resonate with our audience. It's the first time we're really talking about it. So I'm really glad that we opened that conversation. And I hope that our clients and listeners reach out to you to find out more, and hopefully they can get your book and learn more about what you have to offer. So thank you so much, Simon, for being here with us today. I just want to also thank our sponsor, CamaPlan. If you have more questions or more information that you want to find out about Simon's company, go to brookvillecapital.com. The links will be in the description. And if you have interest in a self-directed IRA, please give CamaPlan.com a look, or you can give us a call, request a consult, or look at our libraries of webinars. where we do educate on many different topics, including commodities such as gold. So thank you so much for being with us today here. I had a great time, and thank you for listening. Just remember to like, follow, and share our podcast, The Road to Financial Freedom, to continue on this journey on the path of finding success. Thanks again, Simon. I hope you have a great day.
Thank you very much. And you.
Mm-hmm.